The GBPJPY pair is popular with traders. The British pound and the Japanese yen represent some of the strongest economies on the planet. The pound sterling is the national currency of United Kingdom and is issued by the Bank of England. The pound exchange rate largely depends on the relationship between the United Kingdom and the European Union. Even after Brexit, the European Union remains the main sales market for England. The economic situation in Europe impacts Britain's GDP, industrial production, employment, and other indicators. The GBP is closely correlated with the euro and Swiss franc. Therefore, when trading the British currency, traders will have to look not only at the news of the monetary and state policy of the UK, but also look at the similar data from the EU. Interest rate changes are also important for the pound, as are the comments of the authorities accompanying this decision. The national currency of the United Kingdom is influenced by the cost of commodities as well. Typically, GBP traders often monitor the price of oil, natural gas, and grains. Change in their value can signal inflationary pressures on the UK economy and therefore on the British pound. The yen is the Japanese national currency. It is issued by the Bank of Japan for several decades. The yen was considered the third most important reserve currency, but later its role declined, giving way to the British pound. The GBPY rate depends on the country's monetary policy. The Department of Economy, Industry and Trade is committed to making the yen cheaper compared to the pound sterling, euro, Canadian and US dollar, and other currencies. These measures are aimed at increasing the competitiveness of Japanese in the world market. The leadership of Japan maintains of the lowest interest rates on the planet in order to increase business activity in the country. Decisions on change in interest rates are important for the yen, as the publication of the data on the country's GDP, unemployment rate, industrial production and other indicators. Also, the Japanese government is trying to regulate the volume of imports and export. This type of the control largely defines the cost of Japan's goods and the cost of their manufacture, which also affect the yen rate.